So about 2 weeks ago, we had this Chinese Party Congress where all the Chinese leaders gathered together and Xi Jinping declared himself the new president for the third term. And during that time, foreign investors panicked. Most believe that China has now become uninvestable. So they were fleeing Chinese stocks, they were selling billions of dollars of Chinese stocks. The Hong Kong stock market specifically fell over 10% in those 2 weeks and dropped to the lowest level in 25 years. In 20 freaking 5 years. Again, why? Because again, most of them believe that, you can't buy Chinese stocks anymore. They're going to go to zero. They're going to be nationalized. Everyone's panic selling. So is it true that it is uninvestable? Well, let's find out more in this video. But before that, remember something, that for every seller, there's always a buyer. So if all these foreign investors are fleeing and selling their Chinese stocks at crazy bottom prices, who's buying? It's the Chinese themselves, the mainland Chinese, either both the retail investors in mainland China or mainland Chinese funds. So check this out. This is from China Last Night, which is a great website. You can read about, you've got great macro research on China. So you can see that in the last month or so, you can see that foreign investors are the main sellers of Chinese stocks. In fact, they have sold a total of about $1.7 billion worth of Chinese stocks in the last couple of weeks. One day alone, $280 million outflow. But Chinese investors are the ones buying these Hong Kong stocks from the fleeing foreign investors. And Chinese investors have been buying on average, or in a week, $3.6 billion worth of Hong Kong stocks. Now, these Chinese investors are not stupid, right? So why are they buying it? They are buying it for only one reason and one reason alone, because they know that there's going to be a lot of money to be made during the China stock rebound. You see, the Chinese people, they know their own country, they know their own government better than what the foreigners claim to know. See, for foreigners, they read a lot of foreign media, which, always distorts things, okay? So what you think that China is doing is not what really they are doing. And what you think they're not doing is what they're really doing, okay? So always say this, you want to invest in China or India or whatever, look at what the locals are doing. So if they are buying, there's a reason they are buying. So obviously they know that it is investable. If not, they won't buy, right? But again, let's look at the research. Let's not just follow blindly, and let's find out, why do most foreigners think that China is uninvestable? And what do the Chinese themselves think? And why are they, buying up their own stock? So first and foremost, let's take a look at what happened. Now, again, this 20th China Party Congress, this Party Congress happens once every 5 years. It is a time when all the government officials come in and they kind of like elect the new president and premier for the next term, which is 5 years, and they've got this new Politburo Standing Committee, which is kind of like, all the heads of the country, okay? Now, the foreign media or foreign people, they've kind of freaked out, right? Because they believe in democracy and stuff like that. And Xi Jinping is the first president who says, screw the term limits, I'm going to serve for the third term and maybe forever, right? So people say, oh my God, this guy's becoming like Kim Jong-un. He's a North Korean dictator. He's never going to leave. He's going to serve for life, right? Yeah, I understand, right? Sounds really scary. No more democracy, right? And what's worse is that he kind of like purged his committee of people who are not his boys, right? So within China, you've got different factions. Those who are really pro-Xi, supporting him, and those that are kind of like, against him sometimes. So he basically killed everyone, right? And it looked like on TV, he threw out this guy who was the last president, who was so-called not in his gang, And so he filled all the posts with his own gang members. And again, foreign media's like freaking, oh my God, there's no checks and balances anymore. He's the supreme leader. They will be all yes men. They'll never go against him. And they will do whatever he says. And the perception of Xi Jinping is that he's anti-business. He's anti-economic growth, right? He's this Chinese ideology, communism, and control everything. Is that true? Maybe, maybe not, right? But let's take a closer look. So that's the first concern. But do understand something. If you actually read his speech, in his speech, he is constantly emphasizing economic development. And he keeps saying that economic development is a priority focus for high quality development of the country and modernization. In fact, he used the word modernization something like 85 times, a lot more than his past speeches, right? So if you ask me, yes, he's quite ideological and all that shit, right? But at the end of the day, let me put it this way. What has made China in the last 20 years rise to become this economic power and this military power? It's their private enterprise. If China didn't open up to the world, if they did not promote enterprise and all that, they won't have the money to be so strong. Now, he's not stupid. He's not going to kill the golden goose. He's not going to destroy the main thing that's giving him this economic power that he needs to eventually overtake the US, which is one of his sole mission in life. He's not dumb, right? So think about it that way. Now, at the same time, Xi Jinping has also placed this guy called Li Qiang as his number 2 guy. And this guy is poised to be China's next premier. Now, who the heck is this guy? This guy is from Shanghai. He's the party chief in Shanghai. And what is he known for? Right? Shanghai is the business hub of China. And this guy is known to be a very pro-business, pro-growth guy. So there's a reason why Xi Jinping chose him. Yeah, sure, he's a loyalist. He follows whatever Xi is saying. But at the same time, this is a business guy. So something to think about. Now, while I love democracy myself, and I don't like the idea of one guy controlling everything. Oh, sorry, wait, I'm from Singapore, that's what happens. But anyway, sorry, okay. While I don't really like, a dictator controlling everything, but then again, that's just their system. Who am I to say whether it's better or worse? If it works for them, it works for them, right? Like it's worked for Singapore, right? Better not say. I don't want to end up in jail. Anyway, now, the second thing that's freaking people out, of course, is zero COVID policy, because they keep on locking down city after city after city. It is really hampering on economic growth. And the media and investors were hoping that during the party congress, Xi Jinping would say, you know what, this COVID zero, I'm going to do away with it. But he didn't. He didn't say anything about it. So people were really disappointed. In fact, he kind of justified why his zero COVID policy was so great. So of course, that's why the whole market collapsed. Like there's no end to COVID zero. Now, those of you who are in my private community, I've been sharing with you guys that behind the scenes, they are actually loosening up the zero COVID policy. They're already opening up. It's just that they don't play it up in the media. Like, for example, do you know that in March next year, China is already planned to host the Formula One, F1 race, which is an international event. People from all around the world going into, if I'm not wrong, Shanghai for the F1. So plans are already being made to open up the country. And as of today, it's been leaked out. Now, this is not official. Officially, they're saying, no, we are not changing the policy yet. But unofficially, there have been a lot of interesting leaks today, which kind of confirms what my sources in China have been saying, because I've got a lot of kind of underground sources in China, right? So this was leaked just today. Now, I'm not going to pretend that I can read Mandarin, because I failed my freaking Mandarin. I got F in all my Mandarin classes, right? So I had to get my friend from China to kind of translate this shit for me, right? So basically, this is a leak from this guy called Zheng Guang, who is the chief scientist at China's CDC. And he just said, as of a few days ago, right? He just said at the city meeting that Beijing's policy will soon have a substantial change. Reopening has already started, which confirms what my sources have been saying. And they're not going to wait till next spring to open up. They're going to open up now, man, now. All right. So according to Zheng, whatever, right? PCR tests will shrink by 90%. They'll be reopening borders with Hong Kong by early 2023, and they'll open with the rest of the world slightly later on. Number 3, they are confident in their inhalable vaccines, which they just announced, where you get high and you're vaccinated, all right? And they believe that their domestic vaccines are not inferior to the foreign mRNA ones, right? By the way, China has their own mRNA vaccines that are at a later stage of clinical trials already. So once they sort that shit out, I don't see any reason why they're not going to open, right? Now, you have to understand one thing. China has 1.6 billion people, something like that. And there are a lot of elderly people in China. And their vaccination rate is not very high. It's kind of only 65%. So you got to understand that if they open up without the vaccination in place, there are going to be millions of Chinese, the elderly, are going to die. And the CCP, for all they don't want to see so many people dying, right? So there is a reason they are doing this. But they are now pushing these elderly guys and women, go get vaccinated. Once they're fully vaccinated, boom, they're going to open up, right? So again, this is not official. It's been leaked Is it really true? Honestly, I can't say 100%. But markets have been reacting strongly. That's why you can see the Hang Seng jumped like 5-6% today. A lot of Chinese stocks jumped up today because of this leak. So if this is true, then China may not be as uninvestable as people think. Now, the other thing that is that concerns a lot of investors, that makes them think China is not investable, is this theme of common prosperity that Xi Jinping talks about. We need common prosperity, which basically means that they want to have moderate wealth for everyone, not just a few. So they don't want the wealth to be concentrated in just the top 1%, and like what's happening in the US or a lot of developed countries, and whereas the rest are poor. They want to close the wealth gap, basically, right? So what does it really mean? Of course, the devil are in the details. It's very vague. No one knows what it really means. So does it mean that they're going to tax the rich heavily, heavy taxes, and they take the money they distribute to the poor through free education, free healthcare? Is that what it means? Wait a minute, that sounds like Europe, right? That sounds like the European countries, which is not so much a bad thing, but anyway. Or does it mean that they're going to tell companies that you can no longer make money, right? Companies, you can't make profits, any profit you make, you can't buy back shares, you can't give dividends, you're going to take all your profits and give it to the poor. Now, of course, if that is true, I'm the first to get out of China, right? Forget it, screw it, waste my time, right? But I don't think that's what they're going to do. They're very pragmatic people, okay? By the way, interestingly, if you take a look at it, the Chinese companies like Alibaba and Tencent, I mean, they're so bloody cheap. The share price have fallen like 70-80%, right? What have they been doing? They have actually been buying back stock aggressively. For example, Alibaba has been buying back $25 billion worth of stock. That represents 15% of their market capitalization. So if you are a shareholder of Alibaba, what does it mean? That means that effectively Alibaba is helping you buy shares on your behalf without you taking out more money to buy shares. Because when a company takes their cash and buy back shares, that reduces the number of shares available. So each share that you own becomes worth more and more and more. You own a bigger stake in the business. So this kind of like contradicts what people think is common prosperity, because the businesses are still making a lot of money. They're using it to pay dividends, to buy back shares, and to grow, all right? So personally, I don't worry too much about this. I think it's more political language, if you ask me, like what they do in the US, right? Defund the police, defund the FBI, you know, whatever, right? They just say this shit to make the people happy. But, you know, at the end of the day, what they execute, they know it has got to be practical for the economy and the business, right? Now, what's the other concern? The other concern is, of course, the economic slowdown in China. That China used to grow 6, 7, 8%, and of course, growth has slowed tremendously, you know, to 3, 4% these 1-2 years because of course the property crisis in China, and of course the overall global slowdown because of the Ukraine war, and of course their stupid zero COVID policy. Now you gotta ask yourself this question: is this permanent economic GDP slowdown from China, and they don't give a shit about growth anymore? If it is, get out, sell everything. Or is it a temporary cyclical thing and growth is going to re-accelerate eventually, right? So if you ask me what they're doing right now, from what I'm reading, this slowdown is temporary. Their focus is to re-accelerate the growth of the economy to get back to 6-7% growth again. And I believe they will get there. So why? Because this guy himself, the big man, Xi Jinping, told his own Chinese people that economic growth is his priority. And Chinese, they don't want to lose face. If they say that's what they're going to do, that's what they're going to do, right? Now, again, you can actually download his entire speech from the party congress. I've got it over here. If you're in my private community, I'll post it on the chat groups, and you can read his entire speech. It's been translated to English. Okay, but I'm just going to summarize basically what he said to his party congress, his government officials, and to his people. So what he said is this, all right? This is a summary, right? His overall objectives for 2035 are as follows. Number one, to significantly increase economic strength, scientific and technological capabilities, and composite national strength. I don't know what the hell the last one means, but basically it's economic growth, right? And that's why they have been actually doing the opposite of the US. The US is doing monetary tightening, raising interest rates, reducing the money supply, China is doing the complete opposite. They are doing their best to stimulate the economy with fiscal and monetary stimulus, cutting interest rates, pumping money into the economy until the growth reignites. Number two, second objective for 2035 is to substantially grow GDP per capita to be on par with that of a mid-level developed country. Number three, to make new strides in reform and opening up. So a lot of people think that China is going to go back to be closed from the world, not according to Xi himself. He says we are committed to opening up and to make further progress in modernizing China's system and capacity for governance, further improve the socialist market economy. So bear in mind the keyword is market economy. All right. So yeah, socialist. Now, if you think socialism is a bad word, which personally to me I don't like, right? I'm not a socialist, I'm a capitalist. But right, if you think about socialists, I think the Europeans are even more socialist than the Chinese, right? But socialist market economy, put in place new systems for higher standard open economy. So they want to reopen, but they want to put in certain standards before they reopen again, right? Last one is to again close the wealth gap, which you would agree that it's not a good thing, that the rich are super rich and the poor are super poor. It's not good, right? For the good of the overall economy to grow, you need to have everyone believing that they can be wealthy. There must be equal opportunity for all, which I think is what everyone wants, right? So the next objective is to ensure personal income grows in step with economic growth and pay rises in tandem with increases in productivity. So ultimately what they mean by common prosperity is this, that they want to make sure that as businesses, yes, you can make money. You can make all the money you want, but do it in a fair way. Don't screw other people, right? If you look at a lot of the regulations they place on Alibaba and Tencent, if you ask me, I think they were very fair regulations because these companies were playing dirty. For example, remember that in the past, Alibaba, they were playing bastards, right? They told their merchants, if you sell on our platforms, you are not allowed to sell on other e-commerce platforms. Now, that's not bloody fair. I mean, in America, you can't do that shit. You get sued, right? In America, you can sell on eBay, you can sell on Amazon, you can sell everywhere. It's open. But in China, Alibaba said, no, you only sell with us. And the Chinese government said, no, that is not fair. So they imposed regulations forcing Alibaba to allow their merchants to sell in other places, which I think is pretty fair. All right. So the Chinese government allows businesses to make money as long as they are fair, as long as they don't participate into anti-competitive behavior that's bad for everyone, which I think is pretty fair, right? And don't forget, the other thing that the Chinese government did was that, of course, they whacked the Chinese education business because it was kind of like doing more harm to the Chinese youths, where they had this thing where Chinese youths had no holidays. They were studying like 7 days a week, 20 hours a day. They were all going nuts, and they stopped that, right? So again, I'm not saying I'm pro-China. I'm not pro-China. I'm not pro-America. I'm pro-logic. I'm pro-rationale, and I'm pro-making money. So, whatever works, guys, whatever works, right? So, by the way, I'm not asking you to buy Chinese stocks. I'm not asking you to invest in China. This is purely an intellectual discussion on what's happening to the market in China, right? So whether you invest in China depends on your own investment objectives and what you feel is a good risk reward to you. Okay, so what are the other concerns of uninvestability? Next will be, of course, the regulatory crackdowns. They keep cracking down on the tech companies, on the education companies. They're screwing up those businesses. So again, they've already said that they are towards the end of their regulations. And again, I don't know if it's completely true, but from so far what I see, more or less they have done those regulations that they need to do, and they should be moving on from that. But again, you never know, right? Now, the next point, this is something that I'm personally most concerned about, all right, which is their Taiwan reunification thing. So Xi Jinping has said in his speech that for them to reunify Taiwan back to China is a priority, it's non-negotiable. They're going to do it by hook or by crook. Okay. Of course, people are afraid that if China invades Taiwan, there's going to be a doomsday scenario because what if the US imposes sanctions on China? They're cut off from the rest of the world, and the whole thing's going to collapse. Sure, if that were to happen, not only will all Chinese stocks collapse, but any US business that has substantial business in China, like Nike, like Apple, like Estee Lauder, they will all drop significantly because 20-30% of their revenue is from China. Now, think about it. China is 20 times bigger than Russia in terms of their economic trade with other countries. If the US were to sanction China, sure, China will suffer definitely, but the US will suffer just as much or even more. I mean, think about it, okay? So it's not in anyone's best interest to do that. Now, if you ask me, will China invade Taiwan? I mean, I'm not Xi Jinping, I've got no freaking clue, right? But my guess is that it's not in their best interest to actually invade the country. You know, it's going to be really tough, right? People are going to die and it's going to be a nightmare. If you ask me what they're probably going to do is they're going to just pressure Taiwan, pressure, make life really difficult for them, do all these drills and all, until eventually the Taiwanese like, okay, we give up, we're part of you, right? Which I don't know if it's ever going to happen, but I think that's the extent of it, okay? But again, this is definitely something that I'm personally concerned about as well. And that's also why I don't invest a lot into Chinese equities. I've got a small percentage of my portfolio in China. Right now it's about 7% allocation. But would I go a lot more, more than 10% allocation? No. Because I think that, it is still more risky as compared to, for example, US equities. So if you ask me honestly, if I had $1, would I rather invest in China or the US? Definitely the US. Why? Because the US, again, is a lot more predictable and the companies there are more globally diversified. But having said that, I personally still want a stake in China because I think that there's huge potential as well. But again, everything comes with risk, so it's all about diversification. Now, again, so remember that there are always two sides to every coin, and this is what a lot of the foreign people are afraid about, saying that it's uninvestable. But at the same time, if you look at the other side of the coin, there are signs of, again, COVID reopening. There's a lot of monetary and fiscal stimulus. The big man himself, he said priority is economic growth, opening up with the rest of the world. And again, remember, at the end of the day, the mainland Chinese themselves, they know their country better than anyone else. They are buying their own Chinese equities in Hong Kong. Right now, they are having this Global Financial Leaders Summit in Hong Kong, where a lot of global bank CEOs are attending. And also in attendance is a representative from the CSRC, the Chinese Securities Regulatory Commission, which is kind of like the SEC of China. And this dude from the SEC of China, he just emphasized in Hong Kong that, hey, our focus is on opening up our financial markets. So they want their own stock markets, their financial markets to do well as well. So once this intense fear of uninvestability can be overcome, once the sentiment changes, what is the potential for the Chinese market, the Hong Kong market? Well, if you take a look right here, you can see that in the last 25 years, China's GDP has gone up 18-fold. The economy is now 18 times bigger than where it was in the past. Companies are making 18 times more revenue than where they were in the past. But the companies are now selling for the same price they sold at 25 years ago because of this irrational, oh my God, panic selling by the foreign investors, which of course the Chinese are slowly buying up happily. Now, if markets normalize and we look at mean reversion, when they go back to their mean, what's the potential upside? So currently you can see that the Hong Kong market has retraced down about 55%, 55% retracement. During the financial crisis, it retraced 65%. So this retracement, although really big, it's not as big as the financial crisis, but still very, very big, right? Now, of course, if and when it can rebound back to its mean, right, we're looking at an upside of at least double or triple the current value, right? Why? Because the current PE ratio of the Hang Seng Index is 7 times earnings. The companies are selling at 7 times earnings. That's crazy. I mean, the US is selling at 20 times earnings. So if China is valued at the same level as the US businesses, you're looking at 3 times price from where it is today. Now, I'm not saying it's going to happen. I'm not saying it's going to happen right now, but it's just a potential. If you take a look at PE ratio, you can see that the Hang Seng's PE is now at 7.2 times earnings, 2 standard deviations below the long-term average of about 12 times earnings over here. The CSI 300, which are the 300 biggest companies on mainland China, selling at 10.5 times earnings, which is one standard deviation below the long-term average. Now, the leaked speculation that China is beginning to ease their COVID policy has led to Chinese stocks showing huge gains today. Now, again, bear in mind, these are not official statements from the Chinese government. In fact, they have actually officially said, it's not true, right? But I always believe when there's smoke, there's fire. So it's still a rumor, it's not official. And my guess is because they don't want to make it official yet. They are doing all the groundwork before they announce it, but it got leaked out, okay? So whether it's really true, I can't say for sure, but what I can tell you is that, yeah, markets rallied today. But again, just because Chinese stocks went up today significantly, it doesn't mean the trend has changed. No, it's still a downtrend. So of course, if you want to be more conservative before you want to add on to Chinese positions or even enter position, wait for a change in the trend if you want to be a bit more conservative. So again, if you take a look at Tencent, for example, you can see that, yep, today we had this pretty strong candle, although it closed lower than the high, but it's still very much on a downtrend. You can see that, yep, prices making lower highs and lower lows. So again, you can look at the moving averages. You can see that as long as the 20 EMA red line is below the 40 EMA, that's a short-term downtrend, and the trend will just continue going down until we see a reversal of the trend. So I want to see at least the 20 moving average crossing above the 40 EMA, right? So 20 crosses above the 40 EMA, there's at least an indication of a change in the short-term trend. So that's where you could take, let's say, a small position. If you're trading, take a position, put a stop loss, right? And then only when the 50 moving average, the blue line, crosses above the 150 moving average and they start sloping up, do we get a more medium-term confirmation of the trend. And of course, ultimately, we need the price to cross above the 200 moving average. And when the 200 slopes up, that is a confirmed uptrend. But of course, by the time that happens, by the time you have a confirmed uptrend, of course, price would have probably moved significantly from the lows already, right? By the time you've got a confirmed uptrend, price may have already moved about 70% up. But of course, there's still a long way to go in terms of getting back to all-time highs. So there's always a trade-off. If you're someone who's looking at a very long term and you believe in the businesses, you think that eventually they're going to sort themselves up, sure, you could dollar cost average on the way down. But if you're more of a trader, wait for confirmation of the trend, wait for the change in trend, even if it means paying higher prices. So it all depends really on your approach to the markets. There's no right or wrong. What makes you feel comfortable. Now, same thing with Alibaba. You can see Alibaba had a crazy surge, and of course it closed halfway, right, lower than the high, but it still went up about 10% today, right? It went up actually 20%, crazy, right? And they kind of retraced back from profit taking. But again, bear in mind the trend is still a downtrend. It has not changed the trend yet. We need to see a clear change in trend before we can say, okay, the bear markets in China is over, bull markets started. We're not there yet, but I believe we will get there. Now, some of you may be wondering, hey, what's with your title, the evil CCP plan? Now, think about it. If you are the Chinese government, you want your stock markets to rise eventually. You want your economies and businesses to flourish, right? I mean, who doesn't want that? Of course they want that. Yeah, they are pragmatic, right? But who do you want owning the majority of your Chinese crown jewels? The foreigners, the guailos, or your own Chinese people? The answer? Your own Chinese people. So something tells me that in their heart, the Chinese government, they are very happy that the foreigners are dumping all their Chinese crown jewel stocks like Tencent and Alibaba. Why? Because as the foreigners are running away and dumping all these at cheap, crazy prices, who benefits? The Chinese people themselves, who are getting to buy all these shares of the great companies at ridiculous prices. So the Chinese government is happy that it's coming back to their own Chinese people. So eventually, when they open up, eventually when their economy rebounds again, who's the one that's going to get rich and benefit? Not the foreigners, the Chinese themselves. So that's their evil plan. Now, whether they intend to do it intentionally or not, I don't know. Now, I hate to say this, but being a Chinese myself, Chinese, in a way, we are selfish bastards. We want to make a lot of money, but if we can help it, we want to make it with our own people. as much as possible. I mean, I always like to joke that, the Chinese are really smart and hardworking. The Chinese invented the paper. Chinese invented toilet paper. Without Chinese, you'd be wiping your ass with your hands. The Chinese invented the compass. The Chinese invented gunpowder. Without the Chinese, you won't have guns in the West, all right? But why is it that the Chinese, for over the last 100 years, they have lost out to the West in terms of prosperity and growth? Because of their bloody selfish mentality sometimes in the culture, right? Now think about it. In the West, if you got a great idea, what do you want to do? You want to share it with everyone, tell everyone about it, right? Like Colonel Saunders, when he figured out how to fry chicken, I want to tell everyone about it and franchise my idea so that I can be really wealthy. In China, when they got a great idea on how to do something, hey, let's keep it within the family, let's keep it to ourselves, don't tell anyone. And it's because of that mentality. That's why China stayed closed for many, many years. They didn't, maximize their fullest potential in terms of business entrepreneurship. But anyway, that's my little thoughts for the day. All right, I hope you enjoyed this video, and I'll see you guys in the next one.